Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our 3-day Precious Metals and Critical Minerals Conference. The next presentation of the day is from Cabral Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Alan Carter, President and Chief Executive Officer and Director of Cabral Gold, which trades in the OTCQX Best Market under the symbol CBGZF and on the TSXV under the symbol CBR. Welcome, Alan.
Thank you very much, Greg. Today, I'm going to be talking about our Cuiú Gold District in Brazil. Cabral Gold is an exploration and development company. We are listed in the US on the QX and on the OTC, and we are listed on the TSX in Venture Exchange in Canada. We have been working in Brazil for a number of years. We've made 5 grassroots gold discoveries in Brazil. I'm the founder of this company and have so far invested $2 million of my own money. And we sold our last company to a company called Anfield Gold, which is now part of Equinox. We have a number of gold deposits within this district. We have 3 gold deposits and we have 4 new discoveries. So we're currently heading towards 6 or 7 deposits, and there may be another 6 or 7 deposits within this district. It still requires quite a lot of exploration. We're in a part of Brazil called the Tapajós district. There is a very large gold mine right on our doorstep, which is operated by G Mining. They are a $7.5 billion company. And we currently have our first initial phase 1 mine, which is in construction and should be producing gold at a cost of about $1,200 per ounce all in from the 4th quarter of this year. That is fully funded, and I'll talk a little bit more about that as the presentation progresses. My background is that I have a PhD in geology. I have 35 years experience. I spent 13 years with Rio Tinto, Billiton and BHP. Brian Arkell was with Newmont for 23 years. Rory McKnight is our manager in Brazil, and Rory has lived in Brazil for 25 years. Luis Solaro is our construction manager. He has 30 years of experience as a mining engineer and is currently responsible for building our stage 1 operation. And then on the board here, we've got a number of folks. John Gilligan is also a PhD. He's our chairman. He runs a company called Liberty Gold. Larry is a fund manager based out of Boston. And Vinicius is a senior executive with Vale, Brazil's largest mining company. In terms of our corporation and our share structure, we currently have about 277 million shares out. The market cap of this company is just over 200 million Canadian, so it's about 150 million US dollars. As I said, we've got 1.2 million ounces in the resource base right now. That is 3.5 years out of date, though, so we've done a lot of drilling since that 1.2 million ounces was defined. Cash position is around about 60 million Canadian dollars, or about that's about 40 million US. The bottom left there, you can see some of the money that I myself was put in, and the share price has done quite well over the last couple of years. I think we closed yesterday at 76 cents, so it's up a little bit. Good roster of institutional shareholders here as well. Now, we're working in an area in Brazil called the Tapajós region. Now, the Tapajós, for those of you that don't know it, is in northern Brazil and is the site of the world's largest ever gold rush. So most of you folks will be familiar with the California gold rush of the mid-1800s. The gold rush that happened here in northern Brazil in the Tapajós starting in the 1980s was 10 times larger than the California gold rush. This is the site of the world's largest gold rush that ever happened on this planet. All these tiny little yellow triangles you can see on this map were areas where placer gold was recovered from the streams. And there was an estimated, the mining agency of Brazil estimates there was 30 million ounces of gold recovered from this whole region. Well, I've been on a bit of a personal quest for the last 20 years of my career in terms of finding out where all this placer gold came from. Placer gold is obviously gold that's been recovered from sand and gravel in streams and rivers. All that gold, just like pebbles and grains of sand, has been eroded from the surrounding area. So the largest placer camp in the 1980s was Cuiú Cuiú. Now, Cuiú Cuiú is located within a very, very strong northwest trend, which is actually a major fault zone. As you may know, large gold deposits are usually controlled by large fault systems. This mine here, the mine symbol you can see there, you can just make out, is Tocantinzinho. Last year, that mine, which is Brazil's third largest open pit mine, produced 177,000 ounces. And the company that owns it, G Mining, has one mine, Tocantinzinho, and that is a $7.5 billion company. So compare that with our company, which is not yet in production. We have 200 million market cap. So that's part of the opportunity here. There are other mines in the area, but it's a very, very prospective part of Brazil. Zooming in, this is our block here in the center left. All these little names that you can see here are the various gold deposits that we found to date. We have 50 other gold occurrences surrounding this cluster. We are drilling on several of these gold deposits right now, the MG gold deposit and also the Jeremoncima area up north here. The bulk of the 1.2 million ounce resource that we calculated 3 years ago, and we haven't updated, is in these red squares. So MG and Central forms the base of that estimate. Now, important thing to realize here, as I said, this mine here on the bottom right, Tocantinzinho, is Brazil's third largest open pit gold mine, producing about 177,000 ounces a year. During the gold rush days in the 1980s, this Tocantinzinho area produced 200,000 ounces of gold, placer gold, from the streams, all through informal mining. The informal mining that happened at Cuiú Cuiú produced 2 million ounces of gold. So Cuiú Cuiú has a footprint which is 10 times larger than Tocantinzinho. And that's part of the reason why we think Cuiú Cuiú is going to be a much, much larger gold deposit than Tocantinzinho. We're still exploring it. As I said, we have 3 drill rigs working right now, but it is a very, very large area. I was directly involved in the discovery at Tocantinzinho. We identified a gold in soil anomaly here in the early days before we did any drilling that was 1 kilometer across. The gold in soil anomaly here at Cuiú Cuiú is 7 kilometers across. So it's got a gold in soil anomaly which is 7 times larger, and historic production that is 10 times larger than this enormous mine just to the south east of us. Zooming in, this is a little bit more of a detail. All these brownish areas are areas that were mined for placer gold. Now, the origin of most of this placer gold, these streams where gold was recovered, we don't know where most of this gold is coming from. We did find the first hard rock source that we found was at Central. That's currently at about 500,000 ounces. That's a gold deposit with outcrops. And then we found this one, MG. We found another smaller one at JB. And since 2022, when the last resource estimate of 1.2 million ounces was recovered, we've discovered what we think are 4 more deposits. Now, these yellow dots are additional showings that may or may not be additional gold deposits. There is an awful lot more gold here. As I said, most of the placer gold in this area is still unexplained. It has to have a primary source. Some of the drill results that we've put out since the last resource estimate 3 years ago, you can see particularly this Mashishi Northeast area, pretty exciting, 12 meters at 27 grams. Well, 12 meters, and I'm just converting that into feet because most of you have been more familiar with feet. That's 40 foot at just less than an ounce. 11 meters at 33 grams, that's about 36 foot, 37 foot at over an ounce gold. So some pretty spectacular intercepts in some of these discoveries. So what I thought we'd do first is we'd have a look at this central PDM area because there is a trend here which is 5 kilometers long. So we're just going to look at this part of the property, and then we'll have a look at MG and this Mashishi area, which we're very excited about. I do have I think I have one slide about the Jeremoncima area where we're drilling right now. This is the central gold deposit. It's a map view. There's a lot of information on this slide. The gold deposit here is about 1 kilometer long, northwest-southeast trending, and about 100 meters wide. It is open at depth, so we don't currently know how deep this gold deposit goes. There are a lot of gaps in it. This is the model from 2022 with these open pits here. There are a number of red blocks here which are currently outside the open pit, and there are gaps between them. As you'll see, there are gaps between these blocks. These red holes are where we plan on drilling in the next month or two. So the idea is to fill in the gaps between these red blocks and create, instead of 3 smaller open pits here, this will be 1 large open pit. So a lot of potential to expand the resource base at Central. Now, as I said, Central is part of a northwest trend, and this map is a geophysical map. Don't worry too much about the colors. The geophysics here is very important, particularly the magnetic response of the rocks here. It's a very good guide for us in terms of finding gold. But the Central gold deposit is down here in the central bottom right of the slide, and it is part of a trend that's 5 kilometers long. We have another new gold deposit emerging 2 kilometers to the northwest called PDM. We don't have a resource on this yet, but we should have a resource estimate in the next 6 months, possibly before that. All these white dots are drill holes, and we have been finding gold elsewhere within this trend. For example, recently at Mutum West, we think there is a fault that connects the Central gold deposit with PDM. As I said, it's 2 kilometers apart. So what's that? About 1.2 miles between these 2 gold deposits, but we are finding gold between them. And we are finding gold too in some reconnaissance drill holes that we've drilled to the southeast here, 27 meters at 6.9 grams. That's, again, converting it to feet, that's about 80 feet at about 7 grams a ton gold. So there are several areas within this trend that need more drilling. As I said, we've got a new discovery up here to the northwest, 1.2 miles away from Central. We've got some very good drill holes in between and to the south of the Central gold deposit. So a lot of potential at Central itself at depth, as I showed you with that model where we saw the open pit outlines, and also a lot of potential within this trend itself. Just moving on, so having had a look at the Central PDM trend, we're back to this map again, which I showed you earlier. What I'd like to do next is show you the MG gold deposit and the Mashishi discovery, and then we'll have a brief look at Jaramunsima. So moving to MG was the second gold deposit that we found. It's an east-west trending body. The mineralized body here is 2 kilometers long, about 1.2 miles long, something like that, and it's about 60, 70 meters wide. So what's that, about 200 feet wide. Now, the yellow outline here is the mineralized zone. This is all averaging about 1 gram a ton and is part of the current ore body. At MG, there are some very high-grade zones within that. So this core box that you're looking at with all the white veining in it is very high-grade. This section runs 2.6 meters, so that's about 8 feet at just under an ounce, 28.9 grams a ton. And we can trace this zone from section to section to section within this gold deposit. Just like the previous gold deposit, there are a lot of gaps in this, and the gaps stem from the fact that we haven't had the drill spacing on it. So the pit outline here is in this mustard color here, but these red holes are what we're drilling right now. So again, we hope to fill in these gaps and expand this gold deposit at depth and join up all these various red blocks to form a much bigger open pit gold deposit. That is happening right now. As I said, we have 3 rigs running right now, and one of those drill rigs is at MG. Both these gold deposits I've showed you so far, by the way, are open on every single section. The sections here are about 200 feet apart, 180 feet apart, something like that. And on every section, this gold deposit is open at depth. So a lot of potential to expand MG and Central at depth here. Just north of Mashishi, just north of the MG gold deposit, which you can see on the bottom here. This is a complicated map, folks. My apologies for that. But the outline of the MG gold deposit, you can see in this blocky color here, this east-west trending zone. The dashed line is the oxide layer on top. The oxide layer is wider, has gold in it too, and I'll talk about this oxide layer in a moment. But there is another gold deposit just to the north here called Mashishi. Again, we don't have a resource estimate on this. We've traced it for about 2/3 of a mile, 900 meters east-west, and there is another new discovery emerging just about 500 foot to the northeast of that called Mashishi Northeast. And these colored blocks that you can see highlight some of these drill intercepts. As I said, 11 meters at 33 grams, so that's about 40 foot at over an ounce. So that is pretty exciting. We have a lot more drilling to do within both of these zones at Mashishi and Mashishi Northeast, and we are drilling down dip at MG right now. Jaramunsima, this is about 2.5 kilometers or about 1.5 miles to the northeast. This is the newest discovery for us, and this is a very, very quick whiz through because I have very little time here. Very, very exciting. We've got some very good drill holes here too, 39 meters at 5 grams, 9.5 meters at 5.7, 47 meters at 2 grams, 82 meters at a gram. This little photo there is very symptomatic of the starter mineralization. All these black and gray little lines you can see here are veins that contain gold. So we don't know how big this is yet, but it is getting bigger, and it's probably going to be one of the largest gold deposits at Kuyu. Now this map is similar to the map I've shown you twice before. You can see the central JB and MG gold deposits there outlined with the bold outline around them. That's where the 1.2 million ounce resources are within those 3 zones. As I said, there are several new discoveries here in green, in this green area, Jaramunsima, we just talked about that. But what I've tried to do is give you some of the results from some of these other targets here. And there are literally way too many drill intercepts and trenches on, and way too many targets to go over here. But if we just pluck 1 or 2 out here, this Alonso area down here in the bottom right, it's a gray box because the gray boxes are fields of boulders, where we've got fields of boulders sitting on surface. So the geologists went up the stream at Alonso, and they knew the stream had been worked for placer gold and found a bunch of boulders in the forest here. Similar sort of thing at Trakaja, 5 kilometers away, 3 miles to the northeast. The boulder field at Alonso averages 91 grams a ton. That's 3 ounces a ton. And we don't know exactly where those boulders are coming from yet. The boulder field at Trakaja is 74 grams a ton. So very, very high grade boulders all over the place here. We have Cabral Gold is a vein that's sticking out of the ground here, where the vein is averaging 3.7 kilograms per ton gold. So a lot of very, very high grade gold occurrences. These are the Alonso occurrences. These are spread over about 1,000-foot diameter area. A lot of quartz sulfide blocks, and as I said, this is one of 50 targets. The boulders here are up to 200 grams a ton. I think the lowest gold value we got from this area was 11 grams a ton, but we still need to determine where these boulders are coming from. So lots and lots of different targets here. So we are pursuing, this is the second part that I want to get to now of the presentation. We have a district scale project here. It's very, very unusual. In order to develop this district, we believe that the best way of doing this is through 2 stages. Stage 1, which we're currently heavily involved with right now, is to build a starter operation to mine the weathered material. Now, this weathering profile here is very, very deep. It is 200 foot deep, or about 60 meters deep. So the rock has actually been weathered to mud. Now, that mud has the same gold content as the underlying rock. So we're going to mine this mud and soil and process that and use that to start with cash flow. We're only going to be doing about 3,000 tons a day, but this should be quite a profitable starter operation. The big prize would be the much larger second stage, which is to mine the hard rock material here. And the goal of this is to avoid equity financings and keep diluting the capital structure of the company. We want to stop that dilution. We did do a PFS that we released in July 29, a pre-feasibility study that was done by a big engineering firm called Ausenco. And the after-tax internal rate of return at an assumed gold price of $2,500 an ounce, which is half what the gold price is now. The rate of return back then, 6 months ago, was 78%. And it had an NPV of $73 million. CapEx, where we've raised this money, it's in construction, is only $37 million. And we're about 30% the way through the build. So payback back in July on this gold price assumption was 10 months. The payback right now is less than half of that. It's 4 to 5 months right now. So as I said, it is under construction. We are going to be mining what I call oxide blankets, so weathered caps, to 3 of the known 5 gold deposits. We have gold in this oxide material, this weathered mud. We call it saprolite on 5 areas here, and we're going to be mining Central, MG, and Mashishi. This cross section here is typical. All this orange material is the weathered mud. As I said, it's up to 200 meters thick. Very good gold grades directly above the primary gold deposit in the hard rock. So stage 1 will only mine the top of this. Stage 2 will be focused on mining the much larger resource in the hard rock. That's the resource base. We've got about 300,000 ounces here, inferred and indicated just in the mud. As I said, the overall resource base as of 3.5 years ago was 1.2 million ounces. About 25% of it is in this saprolitic mud. Here's some of the assumptions. This little starter operation is going to be quite modest. We're going to be mining 130,000 ounces over 6.5 years. And the life of mine average here is around about cost, all in sustaining cost is about $1,200 an ounce. So at the current gold price, we're making about $3,800 profit. And we're going to be doing about 20,000 ounces or so on average. That's the capital cost, $37.7 million. The build is about 30% complete right now. This will be a heap leach operation, very similar to a lot of the mines that you folks are familiar with in Nevada. So there's nothing sort of unusual about the processing method here. These are some of the PFS highlights. Again, there's the base case that was done 6 months ago in the study, the engineering study that we did, pre-feasibility study. Here's the upside case. And I've kept this on just to remind us all how the gold price has moved quite a lot. But when we released the results of the study, the spot price in July was $3,300 an ounce. Obviously, it's a lot more than that now. So you can see at $3,500 an ounce, the payback on this thing is 6 months, and the after-tax IRR is 151%. So we're way beyond that in terms of profitability. This will be an extremely profitable starter operation. The mine life, by the way, should go a lot longer than the 6.2 years and the study here, because it only contemplates mining 3 of the 5 known oxide deposits here. That's a shot taken about a month ago of the site. As I said, it's early days in terms of the construction, but this is moving very, very quickly. We've upgraded the road, built a lot of bridges, and that's the road, the mine road into site. Project sensitivities, I won't dwell too much on that, but that just, again, using some very conservative gold price assumptions, you can see what happens to the IRR and the NPV. Timeline, here we are for commissioning, probably Q3, and we should be producing and ramping up this operation in Q4. So we're currently completing the earthworks, pouring concrete. Most of the procurement is now done, and the engineering is largely wrapping up. So we're currently on schedule and on budget here. So what's the opportunity with Cabral Gold? Why might you folks want to take a closer look at this? Well, as I said, I'm a major investor in this company. I've so far invested $2 million of my own money, which is a big chunk of my net worth. We have been involved as a management team with 5 gold discoveries in Brazil. The largest one is that big mine that is right on our doorstep. We already have 1.2 million ounces here, which is blocked out and drilled off. And that estimate hasn't been updated for 3.5 years. And we're hoping to update that later this year. So it should be, we hope, will be quite a significant step up in terms of the overall resource base. Tapajós obviously is well, not obviously, but I can tell you it is becoming a very hot area in terms of gold, particularly in Brazil. It is probably the hottest region in Brazil right now to look for gold. We've not got 1 new discovery, we've got 4. I showed you a little bit about a district scale of some of these boulders that are lying on surface. All these need to be tested, and we have what should be a very, very profitable starter operation that should be producing gold in the 4th quarter of this year, so pretty soon. So with that, I think perhaps we'd get some questions. I've got a Q&A box here, so I've got a question here. Is the heap leach build fully funded? Yes, it is. We raised $45 million as part of a gold loan here. So it is fully funded. The question is, you've just reported high-grade results at Jeremy and Sema and further positive holes at Mashishi Main. how, if at all, do these change your internal view of the ultimate oxide and hard rock ounce potential versus what's in the PFS? They do change the view. It's going up. Both the new discovery at Jeremy and Sema was not contemplated as either of the phase 1 oxide operation or in terms of growing the global hard rock resource here. So it's very, very positive. We've got a very important new discovery at Jeremy and Sema. I do happen to think that it's probably going to be one of the largest gold deposits at Kuyu. But, watch this space. As I said, we have 3 rigs operating, so a lot more drill results coming. Well, you guys are all paying attention here. How are we thinking about capital allocation once stage 1 is running? And what's the rough percentage split between exploration, drilling, debt repayment, and potential expansion capex? Obviously, we want to pay down that debt, the $45 million debt, as fast as we can. But we are going to be continue with the exploration drilling. In my experience, it's pretty rare that mining companies continue with exploration drilling during the build. We're going to be doing that, and we expect to accelerate that once we get into production and start producing gold. I can't give you an actual rough percentage right now, but the exploration drill program, which is currently 3 rigs, will expand significantly once we're in cash flow. But as I said, debt repayment will be very important to us. How much does stage 2 construction cost, and will that be covered by earnings from stage 1? Good question. We don't have a figure for the stage 2 construction. It will be significantly larger than the $37.4 million for the stage 1. It will undoubtedly be hundreds of millions of dollars. We'll be processing a lot more material. Instead of 3,000 tons a day, which is what we're contemplating with the oxide, we'll probably be scoping something out for 10 to 12,000 tons a day. What are the main technical red flags you're monitoring as you build the heap leach operation? Metallurgy, permeability, clay content, rainfall. Look, the water balance is something that is we're carefully monitoring, particularly with the construction. We are in the wet season right now, so that's a little bit slower than it would be in the dry season. We anticipated that in the schedule. We've done extensive met work. As I said, there was a pre-feasibility study done here by Ausenco, which is one of the world's largest mining companies. So yeah, as I said, so far it's on time and on budget. I anticipate there will be some teething issues we'll need to work through. That's what commissioning is for, and that happens with all mines. Do we have any mines or properties outside of Brazil? No, we don't. We're focused on Brazil. And by this way, we all been working in Brazil a long time. It'll sound a bit exotic for perhaps a lot of you folks, but I'm married to a Brazilian. Most of us are married to Brazilians, and we're fluent in Portuguese and spent big chunks of our working careers active in Brazil. Here's another question. You have over 50 peripheral targets plus 4 new discoveries. How are you ranking these for drilling dollars over the next 12 to 24 months? That is an excellent question. Look, the ranking of these targets is changing all the time as we get more information. And we look at all the available data that we've got. As those of you that follow this company closely, you'll be aware that we are very excited about this drone magnetic survey that we're doing right now. We did a test survey, and the resolution with the magnetic data was miles and miles better than what we previously had with a fixed wing air mag survey. Why is that important? That's important because these gold deposits have a magnetic signature. They are magnetic lows. So yeah, very exciting. Okay, what else have we got here? I'm trying to get to some of the earlier questions. From where you sit today with construction advancing, the gold loan in place and multiple discoveries growing, what do you think the market is most understanding about Cabral's upside over the next 2 or 3 years? Underestimating, sorry, what did market most underestimating? They're underestimating that we're going to make $80 million US profit a year from within 6 months' time, starting in 6 months. Most gold producing companies are valued at 6-7 times earnings. So if you apply that slide rule to, and you assume that we're producing we should start producing 25,000 ounces a year with a $3,800 margin, that should give you some idea about where the value could go. I'm almost out of time, guys. What else have we got here? I've added John Gilligan as chair and are clearly building an operations heavy team. What does that allow you to do in terms of moving faster? On optimization expansion studies. John's input, because John is the CEO of a company called Liberty Gold, is very, very important to us. So look, guys, I'm out of time. If anybody has any other questions, please let me know. And you can email me directly at alan@cabralgold.com. Thanks for your time.